Welcome to the Deep Dive, where we try to cut through all the noise and get you well-informed fast. There are just so many financial platforms out there now, right?
Yeah.
All vying for your attention. It can feel like you're hacking through a jungle, just trying to figure out where to put your money. So today, we're taking a really deep, unblinking look at one of the giants, Charles Schwab, specifically their brokerage account. Our mission really is just to boil down everything you need to know. We're using a detailed 2025 review as our main source. We want to give you those crucial insights, without the information overload. By the end of this, you should have a much, much clearer picture of what Schwab offers and, maybe more importantly, what it might mean for your financial path.
Yeah, and that clarity is just so important, isn't it? The whole financial landscape, it's constantly shifting. You've got new features, different fees, regulations popping up all the time. What was true yesterday, well, it might not be today. And that's why having a truly balanced, in-depth analysis is so valuable. We're not just going to list off features here. We really want to unpack the implications, highlight the why behind them, and look at both the shiny benefits and, the important trade-offs too. This deep dive, it's really designed to equip you with those specific nuggets of knowledge so you can feel confident making decisions that actually fit your own goals.
Absolutely. Okay, so let's jump right in. Let's start with what probably brings a lot of people to a platform like Schwab in the first place, its core strengths.
Yeah.
Especially its broad accessibility and how cost-effective it can be. Our source material, this 2025 review, it really hammers home that Schwab is a, quote, versatile option for investors of all levels.
It's designed to meet all sorts of different needs, offering a range of tools, features, and account types. And what really stands out, particularly if you're just starting or maybe just trying to maximize returns, are those cost-saving features. We're talking a genuine $0 account minimum for standard accounts.
Right. That's huge.
Yeah. So you don't need a massive pile of cash just to begin. And crucially, commission-free trading on stocks and ETFs. For many of you listening, that's probably a massive deal. It just removes a big barrier, makes investing way more cost-effective.
Oh, absolutely. And this point about zero minimums and commission-free trading, it's not just a nice to have. It's genuinely revolutionary. If we kind of step back and look at the bigger picture, it has profoundly democratized investing over the past decade. Think about it. Before this, even small investors faced commissions, right?
Yeah.
And those could really eat into your returns, especially on smaller trades.
Yeah, definitely. So removing these fees means, every dollar you invest goes further. It's incredibly beneficial for new investors just taking their first steps. It lets them start small, learn the ropes without fearing high transaction costs. But it also impacts experienced investors quite a bit. Allows them to rebalance portfolios, maybe make tactical trades more often, all without that drag of commissions. It really does level the playing field. Makes building wealth accessible to, a much wider group of people.
It's a game changer, for sure. Okay, but Schwab isn't just about, the entry-level stuff. They clearly get that people need more advanced tools, more support as they grow. Which brings us to their more sophisticated offerings. They've got Schwab Intelligent Portfolios. That's their well-regarded robo-advisory service.
Right, the automated investing.
Exactly. This isn't just about having an account. It's about smart, automated management. The review highlights benefits like automated portfolio rebalancing and tax loss harvesting. Maybe we should quickly unpack those.
Good idea.
Okay, so automated portfolio rebalancing just means your investment mix, like say you want 60% stocks, 40% bonds, it automatically gets adjusted back to those targets when the market shifts things around. You don't have to manually tweak it.
Which takes the emotion out of it.
Right. And tax loss harvesting. That's a pretty clever strategy where the system automatically sells investments that have lost value. It does that to offset any capital gains you might owe taxes on or even a bit of your regular income. It could potentially lower your tax bill. And for people who want a more personal touch, there's even a premium tier. It offers access to certified financial planners for more personalized guidance. It really seems like a compelling mix of, cutting-edge tech and actual human expertise.
That blend really is a key takeaway here. The efficiency you get from the technology combined with the strategic value of human advice, that stands out. And let's dig just a bit deeper into why these automated features matter so much. Rebalancing, like you said, it takes emotion out. It ensures you stick to your long-term plan, even when the markets are going haywire.
Yeah, stops you from panic selling or chasing hot stocks.
Exactly. It prevents you from chasing performance or, yeah, panicking during downturns. And tax loss harvesting. I mean, doing that manually is complex for most people, but having it done automatically, it can deliver real, tangible savings. The ability to automatically cut your tax burden year after year, well, that can compound significantly over time, adds real value. And this sort of raises an important question, doesn't it? How are these hybrid models, the ones with robo-advisors and access to human planners, how are they fundamentally reshaping financial advice?
How so?
Well, they're making sophisticated strategies, personalized guidance available to a much broader range of investors than ever before. It's not just for the ultra-wealthy anymore.
That's a crucial point, expanding access to that kind of expertise.
Yeah.
And Schwab seems to keep catering to like a really diverse set of investor goals and needs. For those of you listening who want your investments to align with your values, the source specifically mentions Schwab's ESG ETFs as a notable inclusion.
The sustainable investing options.
Right. ESG, for anyone not familiar, stands for environmental, social, and governance. So these are ETFs that focus on companies doing well in those areas. It's about ethical, sustainable practices. Then, thinking longer term, like retirement, Schwab highlights a variety of IRA options, including traditional Roth and SEP IRAs.
All the key ones.
Yeah. And for folks planning for, say, college costs down the road, they also offer 529 savings plans. These specialized options, they really show a commitment to, like, comprehensive financial planning.
What's really compelling is how these specific things fit into a bigger picture, a holistic plan. ESG ETFs, for instance, they aren't just some trend. For a lot of people, they're a way to invest meaningfully, and the growth there reflects a broader shift in society.
True.
And when we talk IRAs, the difference between a traditional IRA, where contributions might be tax deductible now, but withdrawals are taxed in retirement, and a Roth IRA, where you contribute after-tax money, but withdrawals in retirement are tax-free. That distinction is critical. It depends on your income, your future tax expectations.
Right.
Yeah.
Different benefits for different situations.
Exactly. And SEP IRAs, simplified employee pension plans, those are particularly powerful for self-employed people, small business owners. They allow for much larger tax-deductible contributions. But beyond just having all these different products, the source also highlights Schwab's strong emphasis on investor education.
Yeah, the resources.
They provide a ton of resources, articles, videos, webinars, stuff to help you understand your choices, manage risk, really empower yourself. It goes beyond just making trades. It's about genuine financial literacy. It kind of reinforces the idea that Schwab aims to be this reliable platform for building wealth, across different life stages and goals.
Okay, so, wow. We've covered a lot of Schwab's strengths, haven't we? Accessibility, low cost, advanced tools, diverse offerings. But no platform is perfect for everyone.
Right.
And a real deep dive means looking at the other side of the coin.
Yeah.
So now let's dig into some of the important considerations, the potential drawbacks that the 2025 review highlighted. This is where it gets maybe really interesting. Because understanding these limits is just as crucial for making an informed choice.
Precisely. Every single platform has trade-offs. It's vital, really, to fully understand where Schwab might not align perfectly with your specific investing style or, your needs. Let's start with margin rates.
Okay.
The review notes these are relatively high, specifically ranging from 11.75% to 12.82%. Now, look, if you're not borrowing money to invest using margin, this won't directly affect you. But for investors who do use margin frequently, maybe active traders borrowing from Schwab to buy more securities. Well, these rates are a critical detail, paying almost 13% interest. That can seriously erode your returns, especially if the market isn't, rocketing upwards. It's potentially a major cost for active traders or anyone using leverage. You could almost see it as Schwab maybe subtly discouraging really speculative short-term margin use, which kind of fits their image for long-term investing.
So it's a substantial cost if you're leaning on margin. Wow. Okay, so for active traders, definitely something to note. What about just cash, like cash it in your account?
Yeah. That brings us to interest on uninvested cash. The source points out that uninvested cash earns a low interest rate of 0.1%.
0.1%.
0.1. Yeah. In today's world, where even basic savings accounts are offering much, much higher yields, that's a significant opportunity cost. If you tend to keep a decent chunk of cash in your brokerage account, maybe for liquidity, maybe waiting for the right moment to invest that money is not working very hard for you at all. Now, Schwab does offer money market funds on their platform that usually yield more,
Okay.
but the default rate, that 0.1% on just uninvested cash, it's definitely something to be aware of. It sort of encourages you to keep your money invested rather than just sitting idle, which, depending on your strategy, could be a pro or a con, I suppose.
So your idle cash could definitely be doing more somewhere else. Good to know for managing liquidity.
Yeah.
What about trading specific things like ETFs? Any quirks there?
Yes, on the trading front, there's a specific nuance with fractional share trading.
Yeah.
While Schwab does offer fractional shares for stocks letting you buy, say, $10 worth of Apple stock, the source clearly states it does not support fractional ETF trades.
Huh. Only for stocks, not ETFs.
Correct. And this might seem minor, right? But it's actually a pretty significant distinction, especially for, say, newer investors or those building really diversified portfolios with small, regular contributions. Imagine you want to invest like $100 a week and spread it across 3 different ETFs. But maybe each ETF share costs $150. If you can't buy fractional shares of those ETFs,
You can't buy any of them that way.
right, you're forced to either buy full shares of fewer ETFs, maybe consolidate your investments, or just wait until you have enough saved up for full shares, which delays your diversification. So this limitation can make building a precise portfolio more challenging if you're working with smaller amounts.
That's actually a really subtle but potentially impactful point for anyone trying to build diversification on a budget. Okay, and finally,
hmm
the big one everyone asks about these days, crypto. Cryptocurrency. What's Schwab's stance there, according to the review?
Good question. And it's a pretty clear area of limitation based on the source. It clarifies that direct investments in cryptocurrencies are not available through Schwab.
Okay, so no buying Bitcoin directly.
Nope. You can't buy and hold Bitcoin or Ethereum or whatever directly within your Schwab brokerage account. So for investors who are really passionate about direct crypto ownership, maybe self-custody, this is a definite drawback. However, it's not like they completely shut you out from the crypto world. The review also mentions that Schwab does provide access to spot Bitcoin ETFs and other indirect crypto options.
Spot Bitcoin ETFs. Can you explain that quickly?
Sure. A spot Bitcoin ETF is basically an exchange-traded fund that directly holds Bitcoin as its underlying asset. So buying shares of that ETF lets you get exposure to Bitcoin's price movements, but you do it within your traditional brokerage account. You don't have to worry about managing the actual cryptocurrency yourself, setting up wallets, security, all that stuff.
Got it. So you get exposure, just not direct ownership.
Exactly. And that approach, it aligns more with a regulated traditional investment strategy, which, is often Schwab's focus.
Okay. So let's bring that together. If I'm sort of a typical investor, right, looking to grow wealth long term, maybe dabble a little, but definitely not day trading, how much do these specific limitations work? The margin rates, the cash interest, fractional ETFs, crypto, how much do they really affect me? Are these just minor annoyances, or could they be like deal breakers?
Yeah, it's a great question. And the impact really truly hinges on your individual profile and your priorities. For a buy and hold investor, someone focused on traditional stocks and maybe some broad market ETFs, someone who doesn't use margin, doesn't need direct crypto, many of these limitations might be pretty minor. The fractional ETF thing could be a small hurdle when you first start diversifying, maybe, but probably manageable.
Yeah.
However, if you are an active trader, someone heavily reliant on margin, that high rate is a big deal. Or if direct, unencumbered crypto ownership is like a core part of your strategy, then Schwab's approach is a major factor. Similarly, if you plan to keep a substantial amount of cash just sitting there, uninvested, that 0.1% interest could be a constant drag, something you really feel. It's all about aligning the platform's features and its gaps with your specific needs and habits. And, as the source wisely advises, always consider speaking with an expert before making any decisions. Especially decisions tailored to your personal financial situation concerning these kinds of nuanced trade-offs.
That is truly excellent advice. Okay, so what does all of this mean for you listening right now? We've seen that Charles Schwab offers an incredibly robust platform. It boasts significant pluses, no account minimums, commission-free trading, sophisticated robo-advisory services, including that automated rebalancing and tax loss harvesting, and a really wide array of account types for all sorts of financial goals, ESG, retirement, education. But as we've thoroughly unpacked, it also comes with some notable limitations. Those relatively high margin rates, the very low interest on uninvested cash, the lack of fractional ETF trading, and no direct crypto buying. You should now have a pretty comprehensive, balanced view of its strengths and its weaknesses.
And that balance, that's what critical thinking in finance is really all about, isn't it? This kind of detailed analysis moves you beyond just the marketing hype, to the tangible realities. And maybe a crucial question this deep dive raises for you is this. How do Charles Schwab's specific features and just as critically its limitations, how do they actually align with your individual investment goals? With your risk tolerance, with your preferred strategies? It's not really about finding some universally perfect platform. It's more about finding the right platform that fits you, like a glove for where you are right now in your financial journey and where you want to go.
Exactly. Understanding these nuances, it's absolutely key to making confident, empowered financial decisions. Thank you so much for joining us on this deep dive into the Charles Schwab brokerage account. We really hope this has given you a clearer picture and truly armed you with the insights you need.
Yeah, and maybe just one final thought to leave you with. Now that you have this detailed overview of Schwab, how might these specific features, or again, their limitations, how might they influence your personal investment strategy moving forward? Particularly maybe regarding things like using margin or how you manage uninvested cash, or even your approach to getting crypto exposure. It's a good moment to reflect on that.
Indeed, definitely something to think about. Keep asking those questions, keep learning, and keep applying this knowledge to your own financial journey. We'll catch you on the next deep dive.